guys, this is your Freedom Trader Collins FT. So today is another beautiful day. We're gonna plunge straight into the charts as usual, and I'm gonna do two things today: an update on the Federal Open Market Meeting or Committee the other day. That's the FOMC, the United States way of putting or making the interest rate on the US dollar. So that happens monthly. So when it happens, it affects the market like directly, especially the forex market, and the impact is high. It pushes some pairs to go like 150 pips within 15 to 30 minutes or within an hour. So that happened yesterday, and before yesterday I had given out this signal. I gave out this signal knowing fully well that there are going to be events and a lot of events. But as I say, if you have your setup done properly, you don't have to care about events, because events, they will only do what they have to do, push the markets towards one direction at that time, and then the market continues to go back to its previous direction where it was supposed to be to go. And if that was your direction, then that's cool, then it's cool for you. So this is what happened yesterday. The event, it happened, the market was at this level, price was at this level, as you can see. Then after the event, price came right up to this level. So after that, because I had given out this signal already and I knew AUD USD is a sell, people were like, hey, you said it's gonna sell, it's going up. And I'm like, that is just an event, that is just a meeting. And the meeting, as per the meeting, the analysis, the forecast show that the dollar is going to be weak, but it doesn't actually say it's going to be weak for the rest of the month or the rest of the weeks to come. So that is the good thing, the beauty about swing trading, because when you have your setup right, whatever happens, you stick to your plan and it's going to follow. So on this trade, I've already gotten out 2 times. This is my third time entering, and I re-entered yesterday after the event. My first time I had 50 pips. Second time I had like 40 something pips. So this third time already I'm up about 60 pips already. Yeah, though it's a swing trade, but since I know this is the direction it's going, it's down, then I keep it down. I only sell, I don't buy. Whatever the case, even the event as it started going up, I still didn't buy. So that is a good thing about swing trading. And as you can see, the event price actually went right up. Price actually went right up to this level. And what happens is, when it happens like this, and price tried also to go up, it didn't break that level. It didn't break the level. It actually reached just here, just below the level during the event, and it started coming back. So right now, what we are trying to observe is how price is going to behave at this level of the how price is going to behave how price is going to behave at the across the moving average. So it broke already the moving average, but not actually 100% sure. So let's see how price is gonna behave, and we're gonna be sure 100% that hey, it's a sell. Though it actually broke already, but it's still going up. We don't know if it's rejecting the moving average or it's still going to continue to sell. So with the 1 hour, it broke already, try to reverse then still broke, and it's actually below the moving average. So if that be the case with the 1 hour, we are already good to go as a sell. And let's see the 15 minutes. So the 15 minutes, it's actually moving back up. So at this point, at this level, actually it's saying you don't have to do anything, you don't have to sell, because it's at the resistance level. Price is actually at the resistance, which is also like a support, because it actually broke yesterday the resistance, and now it's inside the support line. So when it's at that level, you don't have to actually do anything. But if you are already an experienced trader, you know exactly what the market is doing and where the market is going to. You don't have to bother. You just have to trade whenever or however. So that was it with the updates on the FOMC yesterday, and on how the signal that I put last week is going till now. So as I said, it doesn't mean that you're gonna wait for markets, for price to move right down here before you get out. No, if you are in profit 50 pips, you get out, because when the market moves, it depends on what pair. When the market moves 50 pips, it goes back before it continues. It doesn't just move straight away, unless it's pairs like the US 30 and the GBP JPY, which move like 400 pips at a time, or 300 pips at a time. But with other pairs, moves 50 pips, 100 pips, it goes back. So if you have your setup like mine, and since Monday, this setup I did it since last Saturday, and I put the signal out there, and I said anyone should buy, should sell, be selling AUD USD from Monday, and I was actually selling. So on that same Monday, I got out with 52 pips. Then I chilled, because I knew that when the market goes like that, it goes back up before it comes back. So on Tuesday, it went back up to 0.6726. When it was about 12, I still re-entered, so it came back and broke the previous closing of Monday, and went right down to 6649. So at that time I went out also. Then I waited, because on Wednesday it started consolidating, and I knew it was because of the FOMC event. And when the market pushed right up to 6758, I still re-entered. I re-entered when it was kind of proving that it's not going beyond that level. I re-entered around 6736, and now it has 6685, which is also already a good one. So that is how you do it. So I'm going to continuously sell, 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 sell until it reach there. Selling, getting out, re-entering, getting out, re-entering. It doesn't mean that I'm going to wait for the price to do whatever it has to do until it reaches here. No, I'm a swing trader, but I get out as a day trader, and I have the mindset of a swing trader, but I end up trading like a day trader. So it's another way of saying it, and looking at it as looking at it from a bigger picture. So these ones, guys, we've talked about them. These are signals. These are signals. These are signals. When you see something like this, these are signals, guys. Yeah, these are signals. So this is just a tip I'm giving you out there. This is just a tip. Yeah, when you see candles like this, as you can see, I deal mostly with candles. Yeah, candles, market structure. Candles, market structure. I don't go too far. Yeah, I don't go too far. And the indicators, I barely use indicators. So beginners, they do use a lot of indicators, but when you are already at a certain level in trading, you don't need indicators anymore. So that's exactly what I'm doing. So anyways, thank you guys. That was it for the update for the AUD USD signal, and also what happened after the Fed. So the market will continue to sell, as I said, and it doesn't mean you wait until take profit down here about 400 to 500 pips. No, just make sure whatever you are doing with the AUD USD, you sell. You don't buy until you reach at this level down here that I marked already. Okay, thank you guys. Your Freedom Trader signing out.